Hello everybody, Mike Sainamore here, aka Precise26 from precisiondigital.ca, and right now I'm going to look at the Australian versus the US dollar. Okay, so I'm looking at the 4-hour chart and I can see a descending wedge. Okay, so we got a descending wedge and that's usually a bullish pattern. So we look for the break and then we get bullish after that. So everything looks perfectly on par with this because we do have the break. One thing I'm a little concerned about actually here is we only have two bounces. That's going to be a problem. I mean, I guess it's okay for now, but we have to be cautious because when there's only two bounces, okay, so maybe it's that. Okay, so we're definitely going to have to look at it more like this and that it is not a break, because whenever you have a formation, if it only has two bounces like this one here, then you readjust, right? So if we take this right here, put it perfectly there, put it onto the second one there, we can see maybe there only two bounces, there's only two bounces, so it has to be here now. So this is most likely the true line right here because it's got a nice peak going. But what I do notice already is we do have a higher high. We have a lower low, but we have a higher high. So now if we set a new higher low, then we will likely break through this. So basically, I'm looking to see a third bounce onto this line right here, okay? I expect this to break up. Like I said, this is a bullish signal. And if it does break up, then we're going to probably hit this 50% Fibbo and very likely break through that and come off to this resistance up here to make a third bounce there. So pending order above this line, you will have to trail it. Okay, so maybe about right now it would be just about here, maybe, you know, a 1/4 inch above the line. And as time goes and the price goes, as time goes, you keep lowering your order to stay with the line. That's very important. If you leave your order here and time passes, you see that way down there, that's going to be too far of an entry, so you definitely have to trail it. We could also set a pending order below the resistance, and the reason being is that on the daily chart we can see that this is the third bounce right here of a nice support line. So that's definitely strong. That's why another reason why I'm expecting more of a break. We can also see that the moving average, this is the 50 MA. Okay, it's broke above the 50 MA. It's also making a bullish flag here. So that would be on the daily. It's very early, so we have to wait to see, but everything is looking good for this to bull. I'm expecting probably for it to come down and touch the line again. You see it doubles up like that often, but not always. It's just this doesn't seem very bottom looking, so I'm expecting more and maybe even more. You know, it could come down to here, but I think it'll hold here and we should go up from there. This is a long-term pattern. So once we break here, we're just going to continue a long-term bullish trend, looking to come back up to this resistance line way up here. We would never trade one trade and just stay in. It's most likely we're not going to do that. What we would do is we would constantly look for buys at the low points, like where it is right now. Every time it comes down to this line is a good buy. And if it breaks, get out and wait for it to bottom out again, or maybe even break down and go for a short. But for the most part, this is bull. That's what we're looking for. Watch for the break. Pending orders is best. Keep your lot sizes to a reasonable size. Don't risk too much. Don't blow your account. And I hope this was helpful. Don't forget to subscribe, like, and share. And have a great day.